This is our last part of the January 2025 First Board Exam, or IAC. This part mainly covers the substantive test of details. So that means in this question, you need to have a strong understanding of the substantive procedure that you would follow, that you will do in order to ensure that the classification of the agricultural drawings are correct, the right is correct, accuracy evaluation, as well as the allocation. So this is your auditing type question, and you need to have a very good understanding of how you go about confirming the amounts that has been provided by management relating to agricultural drawings. Let us look what the question is saying. It's a recommended substantive test of details that the auditors of TT should perform to obtain sufficient and appropriate audit evidence related to the classification, right, and accuracy, evaluation and allocation assertion pertaining to the agricultural drawings of TT for the financial year ended 30 June 2024. Just in summary, you need to get sufficient and appropriate evidence that the classification, right, accuracy, evaluation, and allocation pertaining to the agricultural drawings is correct. So the number of things that can result to this assertion not being correct. So you need to then perform procedures that will give you an assurance that whatever they are saying, it's their agricultural drawings. Whatever the value they've attached to it, it's correct. Whatever the cost they've capitalized, it's correct. And also it is in the name of the company. So you're trying to get assurance over the agricultural drawings value that is attached to the company. And it is as at 30 June 2024. So what are we supposed to take note of is that the following procedures have already been performed. So what are those procedures? It's to obtain relevant schedules from management, casting and cross-casting of those schedules obtaining management representation letter about the assertion, agreed all total to the GL and trial balance, stratification of fixed asset register has been performed, the sample has been selected already, auditing of note to the financial statement has been done, and scanning for all abnormalities or unusual items has already been done. So if you're looking at those procedures that are presented to you here, those are general procedures. They have performed all the general procedures. Now you need to do all the other procedures that do not include any of the procedures that have been said here. I know in most cases, and I remember when I was still in varsity, when you look at this, you like, it seems like they've performed everything, and it seems like they took the measure of the marks that could be available for me while auditing. So that is not true, because these are just general procedure. They do not go in depth to ascertain the value, to ascertain the accuracy, the right, and all sorts of that. And why am I saying that? If you're looking at those procedures, they're not talking about recalculation of depreciation. They're not confirming, checking the impairment. If they are impairment, they're not talking about checking the invoices to confirm the amounts. There is nothing of some sort that has been explained in this general procedure, because this procedure that we have been provided, they look at the overall things and not the detailed things. So what you need to do now, you need to go and look the in-depth procedures and address those in-depth procedure. And they say also consider value-added tax or VAT. Meaning to say now, the assumption is that when you're looking at the amounts that you provided will have VAT, and you have to take out the VAT in order to ascertain the VAT. In order to ascertain the value. And why are you taking out the VAT? You are taking out the VAT on the basis of the fact that VAT is refundable. Therefore, it cannot be added to the value of an asset, because it's the amount that will be claimed back from SARS. Then we're making assumption that they are VAT vendors. Now that we have read part F, We need to then go to the scenario and look at the sections which talks about the drones. You recall that the section that talks about the drones, first, at when they're talking about the valuer. The second part is when they're talking about the 30 drones that they will buy, and then the other one is when they talk about the 10 drones that they buy just to test how those projects would go about. Now, without wasting your time, let us go to the scenario, look at those sections. So when we get to the scenario, this one speaks about latest development. And then on this latest development, we know that it talks about the 30 trons. Then let's check the other part. This part is talk about the funding. So we don't need this part. And then this one is talk about the work consideration. This one it talk about it's a project drawn, right? This one talks about farming and support, so just background. So 1, 2, we don't need. But if you move here to this one, it talks about project drawn, right? And it's when Denzel said they want to, he is interested in the use of drawn. And then here we are told about the advantages of drone over planes. So we don't need this information for the purpose of our substantive procedure. And then when you move down here, we are introduced to ZAGG. So who's ZAGG? As the supplier in China that will be providing the drones to us. And then you move down, they're talking about purchase of drones. And then in this part, they're talking about purchase of drones that they want to purchase as a test. So it basically gonna be first few drones that will be purchased by the company, which will basically be 8 drones. And then they gave us the information of drones which you already read for either required in this question or in this scenario or in paper 3. So this is all the information that we've read and we know about. We know that the drones are 220 each. The period it's 5 years, and then the residual value it's 720. Then the depreciation it's 5 years. Now here we are told about the battery, with how they're gonna use battery. They need 3 batteries, and then each battery on average at 12 minutes, and then 20 minutes to take 20 minutes to recharge, and then they're telling us the story about the batteries. Then this one talk about the solar, and this one talks about operation. We do not need information about operation for the substantive procedure to confirm the value. Then you go down, they are talking about the vehicle. We don't need information about vehicle because our purpose for substantive procedure is to receive assurance on the value for the agricultural asset or agricultural drone. And then when you move down, we are told about information about revenue. We're told about inflation. We also don't need that information. And here we're told about IRR, which we don't need for now. And then this work consideration, which we also do not need for this question. Then here they're basically talking about the funding of drones. You remember that they said they do not have sufficient money to fund the drones because after they use the cash on hand as well as the plane, selling the current plane, they'll still need 14 more million in order to proceed with this project. So if you go here, it speaks about all the information relating to the funding. And then here it talks about latest development. So in all the information, what we have not went through is part 4, which talks about latest development. For that reason, we then need to understand what is in the latest development for the drones, because now it is going to be very important for us to be able to address the question pertaining to the substantive procedure for the agricultural drones. So if you look here, they said they purchased 30 drones, and these drones were purchased for Northwest, Free State, and Eastern Cape clients. Obviously, these are drones, and then they give us the purchase agreement. So based on the purchase agreement that we have, we are told that the conversion spot rate on the 12/02/2024, we are told that the cost price of drone it's 85,600, but this is Chinese yuan. Therefore, we need to convert to our own currency, which is rand. Then they said if converted is this amount. Now, when you're doing substantive procedure, you want to confirm that they use this amount for the 30 drones that they've purchased, because if they did not use this amount, then it simply means that now there is an issue in terms of valuation of drones when it was even first acquired. And then when you see here, they said it's take 14 days to be shipped. And then we are given the coast insurance rate of 500, which is converted to 128 in SA rand. Then we told about the warranty of drone, which is 2 years, and then it's 100% fee payable before shipment. When you go down, you are told that the cost per drone includes assemble cost. On 26 January 2024, TT paid a total amount of 800 for drones, excluding shipment and delivery. And then the drones were shipped on 29 January 2024. They arrived at the port on the 12th, and then customs are repaid as 20% of the market value of drones. So now what could be wrong, which you need to confirm, is that the customs might not be calculated at 20% due to error. And then now you have to address that through your substantive procedure. You need to recalculate to confirm that the customs were indeed at 20%. And then when you move down, you are told that it arrived in Johannesburg Harbour, and then the specialist assembled the drones on 15 February 2024. That was the date when the drones arrived. Then the drones were distributed to all the 3 provinces, which is the provinces that we've been told: Free State, Northwest and Eastern Cape, at a cost of 45,000. So now what could go wrong? It could go wrong is that we do not exclude the VAT in this 45,000, and also we do not consider the 45,000 to be a relevant cost for the decision of getting the value of drones. Then it was brought into use on 1 March 2024. So this is the day that we have to start depreciating those drones. So what could go wrong, and what you need to test when you are doing your substantive procedure, is to confirm that this date when it was brought into use, it was the date that they first started to amortize. What could be an error is that they first amortizing here on 15 February or 12 February, or even when it was transported to South Africa. So now there are a number of things that could go wrong. It's because of the different dates that we have, and then the accountant in the company might make an error. And then you are told that the land and the farmers will enter into a lease for 2 years of the rental contract, and this will be classified as operating lease in terms of IFRS 16. Now you ask yourself now, because you're going to be doing substantive procedure, you need to confirm that it is indeed 2 years, because if it's greater than 2 years, 3 years and more, it will then mean that this asset the farmers will be using for greater part of an asset, which means now classifying it as operating lease might not be correct. Remember, as an auditor, you want to make sure that the books, everything that is recognized, is classified correctly. So the classification as operating lease might be incorrect if the contract says it's 3 to 5 years, meaning it's greater part of the life of an asset. And then also you need to see at the end of the useful life, are these drones not sent to the farmers at a cost that is way lower than the market value? So you need to ensure that by them classifying this as an operating lease, it is indeed correct or not. Because you need to make sure that whatever that is in the books, it's a true representation of the operation of the company as an auditor. And then here we're told about Free State was hit by a severe storm on 3 May 2024. So that was just a month before our year end, which is 30 June 2024. And they said the crop spraying drones were significantly damaged. However, they are appropriately insured. So now what is the issue about now those drones that are sitting in Free State is that they might be impaired. So meaning to say now you need to calculate the value in use and ascertain what will be the impairment for those drones. What could happen is that the firm or the company or TT has not decided that they will take into account what is called calculating the impairment. So the impairment might not be considered for Free State. Then when you're doing your procedure, you're going to have to request them. Where is the impairment calculation for the drones specifically sitting in Free State, or for those 10 drones that are sitting in the Free State? Because you want to get the surety that the value that is attached to the 10 drones sitting in the Free State are indeed accurate and correct, and they represent a true value of those drones. So in your procedure, you need to take into account of matters like that. And then when you move down, they're talking about management options in terms of the repair of those drones. So you basically do not need this much, but you will, however, need to communicate matters relating to those Free State, damaged drones. Then we're going to pause that one. And then this one is talk about intensive skin, which you don't need. And then this is just additional information. So this additional information was mainly required for the calculation of work. If you were part of the other questions, or if you did not go through that questions, please go through that questions, and then you'll see what we have used this information for. So now let's take us to the end of what we need in the scenario. We're going to move and look at the suggested solution and understand how they went about each part of the suggested solution and how did they extract that information from the scenario to move to the suggested solution. Now we go into the suggested solution. In the suggested solution, there is a rights and classification part. So that part speaks about the lease agreement. So we need to inspect the lease agreement. So you as an auditor, because now you are sitting, think of yourself as an auditor as you answer this question, because that's what the examiner wants you to do. They want you to do the substantive procedures or substantive test of details. So now as you answer this question, you need to put yourself in the position as if you are an auditor. So what you will do as an auditor, you will have to inspect the lease agreement in order to ascertain that it is indeed classified as an operating lease. And then what extra you're going to do, you need to see that it is not an agreement that will take 3 years or more, because that will be major part of the 5 years, meaning to say now classifying it as a operating lease might not be correct. So the first part, you want to see the agreement. Does the agreement confirms that this is an operating lease? And number 2, you need to confirm that it is not greater or equal to 3 years and above, because now it's going to be a major part of 5 years, and then that will mean that it meets some of the definition of a finance lease, meaning to say it's no longer correct to define it as being an operating lease. You need to also confirm, based on the lease agreement, that the ownership will not be transferred to the farmer at the end of the lease term, because if the ownership will be transferred to the farmer at the end of the lease agreement, it will mean that it also meets some definition of a finance lease while it is classified as an operating lease. You also need to also look at farmers were not granted the option to purchase the agricultural drone for an amount significantly lower than the fair value. What are you doing? Why are you doing that? Because if they are provided that option, it means now maybe classifying it as an operating lease, it's not correct. Then you perform a recalculation that is on 1 March 2024 of the present value of the minimum lease payments of the specified lease agreement and assess whether it is not significantly close or equal to 220, which is the estimated value. Now, you want to know that the present value, it's not closer to 220, because if it is, that means that it is incorrect for them to classify as operating lease. It should have rather been classified as a finance lease. Then you inspect the insurance agreement or the insurance policy, that is to determine the drones have been insured and that TT is insured properly. Why are you ensuring that? Because you want to confirm what they said is true. Remember, in the scenario, they said that they are appropriately insured, so you need to make confirmation that they are appropriately insured. So that provides additional support that TT has a right to the thrones. As you also look in the insurance agreement, you will see who is insured, which gives you a confirmation of the fact that they do have the right to this list thrones, right? Then the last part, when you're looking here, is that we need to also inspect the loan or bank confirmation or insurance schedule policy minute of the board meeting, whether the bonds have been offered as a security, right? So now, remember, if they borrowed loan, for example, the bank might say they need to have the bonds as surety in case they do not pay the loan. So you need to also confirm that, because that means that these loans will legally be owned by the bank. So you need to confirm that first around going to be obtained in the policy, bank confirmation, and all other information. So when you look at the rights and classification, what we've covered the fact that this lease has been classified as operating lease, and you want to confirm that it is correct for them to classify it as operating lease as opposed to finance lease. And then the other side, you also want to confirm the right. How you confirm the right is by looking at the insurance agreement to ensure that in the agreement it's between the insurer and TT, and you want to look at the loan confirmation or any minutes of meeting of the board to confirm these bonds are not legally owned by the bank as a result of them owing the bank for the purchase of those bonds. Then we look into classification accuracy, that is on the additions or initial measurement. You recall that this was purchased during the year, meaning to say this asset were capitalized during the year. So the initial measurement becomes very important for our assertion in order to confirm that the amount that has been used is indeed correct and it has considered all the material things offered that you have been provided in the scenario. So you need to inspect the contractual agreement dated 23 January 2024, which is during the year, that it is between ZAGG and TT, or they are both the party in the agreement, and it is duly signed by both the party. Why are we using the two names? It's because we've been told that our supplier or our Chinese supplier for this agricultural drones is ZAGG. And then the company that we are auditing is TT. So now we know there should be an agreement between the two parties confirming the sales or confirming the relationship regarding the sales of the drones. And we've moved down to 5. Agreement between ZAGG and TT should confirm the following. The cost price of each drone, it is either you're looking at yen, the Chinese yen, which is 85,600 per drone, or you're looking at SA, which is 220,200 converted to the SA rand. Number 2, you're looking at the standard shipment. You need to confirm that the standard shipment and delivery fee per drone amount to 1285. So you are confirming what you have been provided in the scenario. So doing audit procedure, it's not hard because you are just confirming what you've been told in the scenario. It basically you restating what is in the scenario. There'll be nothing new coming from somewhere else, but everything will be coming from the scenario. Then you're going to look at the shipment term and confirm that it is coast insurance freight. That means sellers covers all the risk until the destination. So CIF. You need to look at the agreement to confirm that. Then if you're looking at number 6, you're looking at the shipment or courier company of drone to confirm that it did arrive on 29 January 2024 and it was shipped on 29 and it arrived on 12 February 2024. And then if we move down, you want to look at the relevant foreign currency with the spot rate where that was obtained from the reputable financial institution. So there are a number of financial institutions that provide the spot rate. So you need to ensure that the spot rates they've used, it is from reputable financial institution, because if they use the spot rate that is not correct or way closer to being correct, that means the value they would have used to convert this purchase price or to convert the delivery cost to SA rand, it incorrect and will result to the value of the drones provided in the financial statement to also be incorrect. Then the custom duties, we were told, is 20% of the value of drones. You need to recalculate, or you need to inspect the custom document to confirm it is indeed 20%. And then the invoice for transportation, we're told that to the warehouse, we're told that it's 45,000. You need to also confirm through inspecting of the documents of the delivery company that was distributing the steady drones to the three warehouse located in the three provinces. So you see, as we go along, that we basically redoing, or we basically talking about what would have been provided in this scenario. So there's nothing new that we are talking about. And then you need to recalculate the cost of the drone. So using the spot rate obtained and ensure that it agrees with the amount provided. So it's basically you recalculating the purchase price to ensure that it is correct. And then you have to recalculate that the import duty is 20%. Then you're going to use the amount given and calculate by 20% and see that you are getting the amount. You recalculate the distribution cost to the warehouse and capitalize it. So now it should be less VAT. So at 45,000 less VAT, meaning to say, because we are a VAT vendor, you need to take into account the VAT. And in this scenario, we were told that we have to take into account of VAT. So you need to reduce VAT. Therefore, the distribution cost that need to be capitalized is only 39,130, meaning to say we have to reduce the VAT. 113, inspect the fixed asset register and the general ledger for the cost price of drone to confirm the following. So what we're going to be confirming is that the correct costs have been capitalized for import duties, distribution cost, and assemble cost. And then number 13.2, you'll be confirmed that shipment and delivery have not been capitalized because it is CIF, the seller carries the cost. You remember that CIF, some costs are carried by the seller, meaning to say you cannot capitalize those costs because they are not costs directly incurred by you. And then you inspect the drone's cost price in the general ledger to ensure that 15% of the VAT was excluded. That is, has not been capitalized. Why? Because we cannot capitalize the VAT because it is a refundable. We're going to get our money back from SARS. Therefore, it's not the actual cost that we have incurred. And then that VAT should be included in the VAT input account or control account. And number 15, you need to inspect the bank statement on 26 January 2023 to confirm that the total amount as stated in the scenario were indeed paid. So can you see here, you're confirming what you've been told in the scenario. There's nothing new. You're not creating any brand new things. Everything that you're talking about, you're confirming what you have been provided. So do not panic if you're asked to do the procedures. Doing the procedures is you saying whatever management has provided, I do not believe into it. So by me not believing into it, I need to confirm those amount. By confirming, you basically taking what you're given and trace to where you can get it. For example, if you see here, we need to inspect the bank statement to see this money leaving the bank. So that's what basically you are doing. You're making confirmation of what you've already been provided. And then accuracy valuation and allocation, so that will be subsequent measurements. If you're looking at the first part, we are looking at the initial measurement. Then we know that after there should be subsequent measurements. So subsequent measurement, we're basically looking at your depreciation and the useful life, as well as it could be impairment as well. So what we're going to do, they said they're going to use a straight line method in order to depreciate this drones. So now you need to test the reasonability of the straight line, considering that it has a residual value of 75,000, which is a little bit more. It's closer to the purchase price. And then you ask yourself whether, based on the residual value of 72,000, we're not supposed to use at least 6 years, because this means the drone will go beyond economic life of 5 years. And then you confirm the date on which the drones were ready to be used. It should be 15 January 2025. So that is when they should start depreciating. And then you need to recalculate depreciation from 15 January 2024. That is when it was ready to be used until obviously 30 June 2024, which is our year end. So what does that mean? It's 4.5 months depreciation. So you can recalculate to confirm based on the scenario that you've provided. You need to inquire from management the reasonability of using the 5 years. Why? Because it's not similar to SARS. You need to confirm, should it not be compared with SARS useful life? You need to calculate the amount of trons as at 30 June 2024 to confirm the accuracy. So you will have a balance that you'll be provided, which will basically be your cost minus the depreciation. Now you need to recalculate that closing book value that you have been provided in order to confirm that is correct. Then you inspect the minutes of the board meeting where the discussion took place regarding the damaged trons and the significant drop in agro-trons fair value to determine management decision on further action on the damaged trons. Now you have to inspect the weather report of Free State during the period they stated in the minute of meeting that they were severe destroyed, those drones sitting in Free State. The weather condition will tell you that the weather wasn't good, and then once you confirm that, then you will be happy. Then now you need to do a physical verification of the drones, not only the one that are sitting in Free State, but the other two province. Why are you going to be doing that? You're looking for the visible signs of significant damage on the structure of the drones to assess whether the damage may impact the drone's functionality or valuation. Then we look at the useful life. What are we going to be doing that? We inquire management what assumptions, internal and external factors that they took into account when determining the adjusted remaining useful life of the drones and evaluate reasonability of the remaining rental term. We need to take note that a period of 5 years and beyond will not be reasonable based on the business practice of TT and reducing the new technology. So when you're looking at the scenario, you'll see that after the drones were destroyed, China informed them that they suggested that they do not repair them, rather buy the new drones because there will be new drones that will be introduced. So that means that using 5 years for those drones might not be reasonable considering the technology would change frequently. So you need to ask management, well, how did they determine 5 years considering that these drones might be destroyed now and over again? They needed to determine the recoverable amount or useful life for the 10 drones in the Free State. Why are we doing that? Because we know that they have been impaired through the severe storm that took place in the province. We need to discuss with management or the inspection of qualifications of the evaluates the competency or in the experience of management who calculated the value in use. So basically, you need to see how competent the management that calculated the value in use. And then you check whether the reliability and accuracy of the present value of calculation applied by the management in the past in order to in other sections or division. So now, first thing you need to know that the person that calculates the value in use has a very good expertise in the industry, and then you check what they've done in the past. Was it correct? And then through discussion with management, inspect the value in use calculation, assess whether there are indication of management bias in selecting the method, significant assumptions and data used in performing value in use. You need to ensure that you address that in line with ISA 540. Through inspection with management, assess whether management has taken the appropriate steps to understand and address estimation and uncertainty. And then you obtain management value in use calculation and assess the reasonability of 6% escalation in fee per hectare by comparing in with the fee escalation per hectare of similar entities. So where are we getting the 6%? Because now we need to calculate the value in use. You need to use the information that you used when you're doing that section, which has the calculation of IRR. So now you need to ask yourself whether the 6% they've used, it is indeed correct comparing the other industry or other part of the business relating to the use of drones. And then through discussion with management of the value in use calculation, assess the reasonability of all cash outflows, including servicing and maintenance of fees of drone salaries, to ensure that not less than prevailing inflation rate of South Africa has been used. You need to inspect the value in use calculation to determine whether management took into account the estimate of 90,000 repair cost or upfront repair cost. You need to inspect the value in use calculation for the residual value and obtain supporting documentation from management that the drones would be sold to third party at the end of adjusted useful life. Then through inspection, ensure that the value in use calculation does not take into consideration the income tax. And then through inspection and of the calculation, evaluate and assess whether the pre-tax discount rate used by management is reasonable in comparison to weighted average cost of capital of 14%. This is coming from the calculation of WACC, which was in part A, if you remember. And then you need to inspect the calculation to ensure that no insurance claim payout, if any, have been taken into account in the cash inflows. Number 36, you need to reperform the calculation of the value in use using management's input and updated input based on reasonable assessments and compare to management estimate. Determine the recoverable amount. So to determine the recoverable amount, it's fair value less cost to sell, fair value determining by management. So now, number 37, we are told that agri val spec is their valuer. So what we're going to do now, you need to check their report. Inspect AgriVal specs report regarding the fair value of the drones and compare it to TT management schedule to ensure that they correspond. 38, inspect the engagement letter or contracts between AgriVal spec and TT and assess the respective roles and responsibility of AgriVal spec and TT management respectively. Number 39, through discussion with TT management and expert written confirmation or declaration of conflicts of interest, evaluates the objectivity and independence of the valuation specialist assigned by AgriVal spec to perform the valuation to ascertain whether any interest relationships may threaten the expert's independence. Why we're doing that? Because we know that if the valuer is not independent of TT, there is most likely that the valuation that will perform, it will be based on what management likes. Number 40, you inspect the CV and qualification of the assigned expert that will be calculating the fair value. And then you need to understand the assumptions. And then once you understand the assumption, you consider the appropriateness of the assumptions. Inspect the valuation report from AgriSpec to assess whether the methodology adopted is appropriate and in line in IFRS 13. We know that calculating the fair value requires a good understanding of the value of IFRS 15, and you need to ensure that whatever the actions they took, it is in line with IFRS 13. Inspect the reports from AgriVal spec and evaluate whether it took into account the fact that brand new agri-drones sell for about half of 2020, 600,000. And 53, you inspect the cost to sell estimation to confirm that 1.50 standard legal contractual drafting fee is taken into consideration. So that is information that is coming from the scenario. Number 4, you perform the calculation of the fair value less cost to sell using AgriSpec input and updated input based on the reasonability assessment and compared to AgriSpec's estimate. And then there will be general procedure that you need to perform, which is to evaluate the reasonableness of value in use as well as the fair value provided on the report through discussion with management, then back test. And 46, you discuss with management the possibility of adjusting or reassessing the residual value of the remaining drones. Expect 45% drop in the market value when the new drones are launched. So you're getting this 45% drop is the information that we provided by our supply in China, that when the new models arrive, there will be a drop in price. And the last part is where you're looking at impairment loss, which will be the higher of fair value, less cost to sell, and value in use. We know that it is in order to get impairment loss, you need to have value in use, which will be the higher of the two. And then you recalculate the impairment loss using recoverable amount is the higher of the two, or is the higher of fair value less cost to sell and the value in use. And then based on the outcome, if there are any significant differences between the auditor's point estimate and the management recoverable amount, consider using auditor's expert. No indicator was given with the scenario, and therefore candidates must not go into details of this procedure here. Then, by combining accounting, taxation, and selected financial management understanding, you will be showing that you understand how to articulate audit procedures. And then by including VAT, including VAT and income tax also to the solution, you will be also addressing the solution very well, which will help you to earn better marks. Then the other part is that you communicate about the recoverable amounts, which is fair value less cost to sell and value in use. By addressing that, you show highest level of understanding what happened in Free State, which will help you to stand very good and better marks. And then the point of note is that it is not necessary for candidates to refer to CAT, as it was not specifically stated in the required. So it's most important that you understand what you have in the required, then you address those parts which will be important. This takes us to the end of this paper. Thank you so much for listening up until this far. We are done with the January 2025 first board exam. We'll then move to the 2024 board exam. Thank you so much. Can you please follow me and subscribe to my YouTube channel? It's called Economics 199, and then my TikTok is also Economics 199. Thank you so much, and bye.